And near term, we certainly should expect to see continued market volatility. I describe these as aftershocks from an earthquake, the earthquake that was and continues to be the worldwide financial crisis. At the same time, we need to realize that the U.S. in a recession will ultimately recover. And what the market usually does is begin to advance, the U.S. market will begin to advance before the recovery occurs, probably 6 months before. So we believe, Drew, that the recovery in the U.S. market wouldn't even begin until March of '09 at the earliest, with a recovery in the economy in the second half of 2009.
Yeah. Now the most difficult thing we do, though, is we give these updates. We try to give people an indication as to what you ought to do with your 401k, and you know, that is the most complicated of all things because they have such limited choices as to how they can invest. They're not going to be able to invest in Asia and commodities easily. Typically, 97% of our listeners of this video are not going to be able to invest in those investments, and also they want to just you know, put something somewhere and just leave it. They don't want to be constantly having to worry about it. But this is not an environment where we can easily do that. It's going to have to require attention, but here's our recommendation. Why don't you tell them what we're kind of laying at, that you know, whether you're conservative or moderate, and they could consider doing this kind of slowly or just do it all at once.
You could do, as we call it in this business, you could scale in. That is, you could slowly approach these levels in your retirement portfolios. And the other thing that I wanted to add very quickly is if you have any questions about doing this, about executing these changes, just give us a call. We're familiar with your situations, and we'd be happy to discuss your individual situation with you. But with regard to our current recommendations, we believe that conservative investors should be about 25% equity, about 50% in bonds or fixed income, and the remainder in stable value, cash, or money market funds. A moderate investor approaching about 50% in equity, 25% in fixed income or bonds, and the remaining 25% in stable value or money market funds. And then a growth-oriented investor would approach 75% in equity, perhaps a little less, and again you can do this over a period of time, with 25% in bonds and very little in cash. And certainly you could take some of the money out of the bonds and use it as a cash augmentation in your portfolio as well.
Yeah. So again, even though we believe that there will be bankruptcies, there will still be bank problems, there will still be insurance company problems, the government is getting way over their head in printing money, it seems as if the risk of the economies are changing, that liquidity is growing, banks are, because the government's taking all the risk of banks away, banks are starting to lend again, especially to each other, which means that this liquidity is going to look for somewhere to go, and it's going to go to some form of equities. And we believe that's going to be the U.S. or Asia, predominantly Asia, because I think that's where the money's going to be treated best. I mean, I could tell you some really exciting things about Asia right now. China alone just had a report just today, 18% bank loan growth. I mean, that means that the Chinese people and Chinese businesses are still extremely optimistic about where they're headed, as opposed to the doom and gloom that people in our country continue to hear and for. These are optimistic about their future. They've got a long opportunity in front of them. They're like the United States in 1950 almost.
So swinging back is just a natural consequence of the amount of liquidity that's being pumped into the system. We believe that will find its way into the equity markets and generally across the globe in activity. Thus, again, the reason that we're choosing to gently put assets to work in portfolios.
Well, again, this is our latest update. As Rodger said earlier, you can feel free to call if you have questions about how to adjust your own specific 401k plan. I hope you appreciate these videos. We'll obviously be doing another one in the future, and I'll see many of you in the near term when it comes time to do your taxes. Otherwise, this is Drew Tignanelli saying God bless.
Thanks, folks.